With no new headlines of bank failures to start the week, the markets found themselves in a no news is bad news for mortgage rates type environment, as this flight to safety, which has basically dominated the markets for the last couple of weeks, really since the collapse of Silicon Valley Bank, is slowly shifting back to being dependent upon income and economic data and inflation. Remember, in response to the fear and the uncertainty surrounding this banking sector fiasco, the markets had been adjusting their projections for the Fed's short-term benchmark rate, building in this assumption the Fed would need to cut rates multiple times by the end of the year to ease pressure on those banks that did not properly manage their bond portfolios, basically, lessening the risk of needing a bailout or of collapsing altogether. And it was those adjustments to the Fed futures forecast that really served as the primary catalyst for these improvements in mortgage rates we've had over the last couple of weeks. Now as those banking fears are easing, are slowly dissipating, those forecasts are returning back to pre-fiasco levels. Therefore, rates lost ground Monday into Tuesday, but were flat the rest of the week. There wasn't a lot of movement across rates. There wasn't a lot on the economic calendar, aside from a few bond auctions to kind of gauge investor appetite, really up until the week's main event, PCE, personal consumption expenditure, came out Friday morning. Now, it is the Fed's favorite with regards to inflation, but it kind of loses a bit of its market impact in compared to CPI, Consumer Price Index, as CPI comes out 2 weeks earlier. Now, PCE, much like CPI, did show that core inflation is continuing to soften. Definitely received favorably by the markets, had some positive morning rate sheets, and thankfully those improvements held through Friday and into the weekend. Definitely a great sign. Now, here in Virginia, Maryland, and DC, this real estate market is hot. Home prices normalizing, coupled with rates coming down, has provided an awesome window of opportunity for our buyers looking to get into homes now as they continue to appreciate and then refinance down the road once inflation and rates continue on this trend lower. But if you have any questions about these headlines, about these rate trends, or if you want to talk about how to put you and your offer in the best position given a very aggressive housing market, let's talk.